Welcome back, everyone. Next, we have GTI Energy Limited. It trades on the OTC Pink under the symbol GTRIF and on the ASX under the symbol GTR, and is part of Wyoming's Insitu recovery ISR uranium mining renaissance, focused on exploring for defining and developing economic ISR uranium resources. Please welcome its Executive Director and CEO, Bruce Lane. Welcome, Bruce. How are you today?
Great. Thanks, Anna. It's good to be with you. Thank you everyone for tuning in to watch my presentation. What I'd like to do is focus today on our Lohuma project, which is our flagship project in Wyoming. It is an in-situ recovery project, I think, as Anna referred to, and we're actually in the resource development stage of this project. So it's not an exploration project as such. We're increasing the size of the resource and improving the confidence. And so I'll speak more about that. Please take a moment or two to consider the disclaimer. We're obviously not providing you with financial advice today, and we'd like you to do your own research when considering an investment in any company, and especially in ours. So their story is really anchored around some key statistics. There are 50 million pounds of uranium required every year to run the reactor fleet in the US. So there are around 94, 95 nuclear reactors in the US that generate power and provide 20% of the US's baseload power and around 50% of the US's green energy. And what is really interesting, though, is that the US only produced around 50,000 pounds last year, according to the EIA. So what's happened is the US uranium production industry has really been in a severe depression. It's been in a bear market ostensibly for around 30 years with a small respite at one point. There's a global shortage of uranium of around 30 to 50 million pounds, depending on how it's calculated. It's not a specific, accurate, agreed on number. There are a number of different views on how much is undersupplied to the world, but there is around 180 million pounds required every year. And at the moment, primary mine supply falls short of that by somewhere between 30 and 50 million pounds, which interestingly, obviously, is about what the US requires every year. We've heard numbers put out there for what the cumulative shortage of uranium is going to be. I've certainly seen projections as high as 1.5 billion pounds cumulative out to 2040. Regardless of how those numbers pan out, there is a significant shortage as we speak. The world has returned to two markets for uranium, an east and a west market, a bifurcated market, as it was in the days of the Cold War. The US couldn't buy uranium from the Russians and vice versa. We've certainly turned more towards that market again because of the conflict, particularly because of the conflict in Ukraine. There isn't a ban on American companies buying Russian uranium at this point, but it's gone through the Congress and is now with Senate, and it may go to the president's desk at some stage. Suffice to say that China and Russia are really operating in their own market to some extent, and it's becoming harder and harder for American companies to source their uranium from countries aligned with particularly with Russia. But what we do know is that the US uranium mining business is restarting, and it's restarting in Wyoming and to an extent in Texas, where there are exactly five in situ recovery uranium mining operations, either ramping up, restarting, or about to restart. We think Wyoming is a great place to be. We think it's the #1 jurisdiction for uranium mining in the US, and that's where a lot of this production is restarting. We're in amongst 7 permitted facilities in Wyoming within around 100 miles, and we're about 10 miles from Cameco Smith Ranch Highland, which is the largest permitted in situ recovery uranium facility in the United States. We've got around 7.5 million pounds of inferred resources so far across all of our projects, and we believe that the current price is more than enough to make these projects potentially economically interesting. And in fact, we believe at sort of $65 to $75, they're very economically attractive, let alone at the current uranium price of around 90. So I'd like to just talk a little bit more about Wyoming and the companies around us that are getting back in production. You can see on this chart, we've got the historical production in Wyoming, largely coming from Cameco, a bit from UR Energy, some from UEC, some from Energy Fuels, and then also some from Peninsula. What we can see from the chart is that UR Energy are back in production, and they're also thinking about moving on with their new development at Shirley Basin. UEC have said they're going to be producing in August this year, and we know Peninsula are tracking towards production at the back end of this year. It's not entirely clear what's going to happen with the Energy Fuels and Cameco, but we certainly have heard Cameco talking about their assets in Wyoming more now than they have in recent years. So we are optimistic that they may start producing at some stage this year or next year. So I'll talk a little bit more about our projects. I think I said at the start that we have our Lower Herma project, which is our first priority. We also have a suite of projects around 30,000 acres in the Great Divide Basin, which incorporates our Green Mountain project. And then we also have some projects, some conventional uranium projects down in Utah, which are uranium and vanadium projects. I won't talk too much about those projects. I'll really focus on our uranium, our ISR uranium projects in Wyoming. Now, I haven't spoken much about in situ recovery mining technology, so I'll just talk about it very briefly. The style of mining is, rather than digging the ore body up, there's wells basically drilled into the ore body, and a leach solution is pumped into the ore body along with carbon dioxide and oxygen in our case. And in Wyoming, is likely to be an alkaline leach, which is like a baking soda, liberates the uranium into the water within the ore body, and then it's pumped to the surface, and the uranium is stripped out of the water, and then precipitated and dried and put in a drum. And that's where yellowcake comes from. And then the water is recycled, cleaned up, and then put back into the ground, obviously without the uranium in it. So our focus is these in situ recovery projects. They're generally lower capital cost to execute. There's obviously very limited ground disturbance involved with mining these projects. And of course, we don't use diesel and heavy equipment to dig up the Earth's crust and then have to rehabilitate it. So they're very attractive from a capital cost point of view, and generally very attractive from an operational cost point of view, making the financial returns from these projects often very good. In situ recovery is responsible for around half of the world's uranium mined. So our projects, the yellow, are here in Wyoming. We're in the Powder River Basin, which is where this yellow dot is in the middle of the screen. And then down in the southwest corner, we're in the Great Divide Basin, and we're close to UR Energy in that basin. So we can see there's quite a number of permitted in situ recovery uranium mining facilities in this region, and we're nestled in amongst them. And just to summarise the resources that the company's been able to define to date, we have 5.71 million pounds at 630 ppm at our Low Herma project, and we also have 1.66 million pounds at an average grade of 570 ppm at our Great Divide Basin projects, giving us a total resource of around 7.37 million pounds. In addition to that, we've published an exploration target of an additional 12 to 20 million pounds. So if we were able to bring that exploration target into resource, all of it, the top end, that would be an additional 20 million pounds. That would give us close to 30 million pounds overall. And that's the sort of activity that we're going to undertake over the coming periods. So our Low Herma project, I think I said, is around 10 miles from Cameco Smith Highland Ranch. It's a little over 13,000 acres. And what we've been able to do there is acquire an historical drill database. The total database was 1,771 drill holes. And of those, 880 sit within the boundaries of the project area that we've been able to stake. And from that data, we've been able to determine that there's a resource of 5.7 million pounds. And I think where we've been very successful is we've been able to do that very quickly. We started last year without any pounds, and it really only took us around six months to publish that resource, which has given us a very low cost of discovery per pound. So last year we drilled a modest campaign just to verify the historical data, and that was a successful campaign. It showed us that the data was accurate within a reasonable tolerance, and it also helped us to understand some of the exploration potential along trend and also at depth in both the Lower Wasatch Formation and the Fort Union Formation. And what's interesting about those formations is the Wasatch is a productive formation in Wyoming. There are other companies producing from that rock formation, and then below that in the Fort Union, that's what is productive for Cameco 10 miles to our east. So we've got both of those formations in the property. We really only have drill holes in the top part of the Wasatch Formation. So part of our exploration is to test the deeper extents of the project. And what this work told us was that there is mineralisation deeper, and we'll be testing that further with our drill program, which is planned for Q3 of this year, so around July. Then off the back of that, we hope to, or we will, publish an updated resource, mineral resource, in the fourth quarter of this year, so before Christmas. And ultimately, what we're trying to do with this project is advance it towards a study, a scoping study or preliminary economic assessment. And so once we've done this drilling this year, we'll have a much better idea about the timing of that study, but we hope to be into the study work next year. I'd also like to talk a little bit about our Great Divide Basin projects. In this map, the yellow area at the top is our Green Mountain properties within our Great Divide Basin portfolio. So this map is around 25 miles by 25 miles. So it's actually a relatively small area. And from an in-situ recovery mining point of view, it's very viable to produce from projects that are this close together. Resin beads from ion exchange plants can be trucked for up to hundreds of miles quite successfully. So these projects are certainly within, or these blocks of land are certainly within a viable distance for them to work together as one project. So the two areas I'd really like to focus on are our Thor project in the Great Divide Basin, where we had a couple of seasons of drilling and have been able to determine a resource there. And I think I said before, 1.66 million pounds. Focused mostly around our Thor project. We've got permits in place for further drilling there. We have been sequencing our project so as to invest most of our time and effort in Low Herma. We may see drilling in this area in the future, but we don't have anything planned for 2024. But what we do have is a plan at Green Mountain. We're in the process of permitting some drill holes for our Green Mountain project. We've identified around 12 miles of trend, uranium trend through geophysics and through historical drilling information. And so we'll plan and permit a program so that if we are able to, we can get onto the ground and drill there during this year, probably in the second half. We haven't committed to the drilling, but we've certainly committed to running the permitting and being ready to drill if the conditions allow. So I thought it was useful just to reflect on the size of our projects and whether or not, because one of the questions I get is whether or not they're big enough to be economic. So what we've tried to demonstrate here is projects like UR Energy's Shirley Basin, which is around 8.8 million pounds of size, and the Encore's Gas Hills project, which is not too far away from our projects, which is a little over 8 million pounds, and Nichols Ranch, which is around that £8 million mark. We know from the preliminary economic assessment studies that have been published by those companies that they are very attractive economically at, in some cases, around $150 million net present value, or certainly some of those projects are over 100% internal rate of return. So we are very confident that projects of around the sort of 8 million, certainly up to 10 million pounds, can be very attractive economically. And that's really what we're trying to do with our Low Herma project, is to take that resource of 5.7 million pounds and through the program this year and potentially with further drilling, develop the resource and increase the size, but also to increase the confidence levels of the resource and bring some of the inferred resource into the indicated category. I thought it was also just worth reflecting on comparative valuations of listed companies. We've chosen 4 companies, including GTI, all exploring or active in Wyoming. And I'd emphasise that we're beyond the exploration stage. We've actually defined resources. These other companies that we've listed here are in the exploration stage. They don't have any compliant resources quoted, but as you can see there, they have valuations higher than the GTI, and I'm not suggesting that they're overvalued. I'm really suggesting that there may be an opportunity for investors to participate with GTI. We think there's that we have some valuation upside. So I'd like to just finish off with a couple of slides. This one sort of lays out our board members. I think of note recently, Matt Hartman joined our team. Matt is our President of Operations in the US. He's based in Denver. He's worked in Insitu recovery projects for a number of years with some of the companies that are operating around us. So he's worked on Dewey Burdock, for instance, owned by Encore. He's worked on Laramide's Church Rock project. He's worked on Cameco Smith Ranch Highland. He's an engineer and a geologist and has the right skill set for us as we move our projects through to the study phase. And so Matt's been a very valuable addition to the team. He now has a firm grasp of the geological potential of the projects, and we're in the process of, as I said before, finalising permitting so that we can get on and continue drilling on the projects. We've got we had around $2 million of cash at the end of, that says the end of the September quarter, but actually it's the end of the December quarter. And we've got around 2 billion shares on issue, which gives us a market cap at the moment of somewhere in the 18 to $20 million Australian range. So somewhere in the range of 12 to 15 US, depending on how you set the exchange rate. So just looking forward to 2024, the rest of the year. Clearly, we've got a permitting process in place, and we'll see some news around the permitting. We're not expecting there to be challenges with permitting. Wyoming is a very good jurisdiction to operate in, and it's very supportive. So we'll hopefully be drilling in around July time, and then the next thing would be an update of the mineral resource before Christmas of this year. On our Green Mountain project, once again, it'll be permitting, and we should be able to get that permitting done in the next month or three, which would put us in a position to drill if we're funded and if conditions are right. And with our Utah projects, we're really reviewing those in light of all of the activity that's occurring in the Colorado Plateau and in Utah and Colorado. We've got Energy Fuels at White Mesa, which is the only hard rock uranium mill in the US. Energy Fuels are in the process of, they've restarted mining operations at 3 mines down in that area, and they are, I believe, planning to produce uranium in the back half of this year. So, and they have talked about putting out an ore buying schedule for the district as well. So on top of that, we've got Anfield Energy, who are in the process of working towards a restart for the Shuttering Canyon Mill at Tikaboo, which is very close to some of our projects. And Western Uranium Vanadium have also announced that they have a site at Green River, and they plan to build a uranium processing facility there for their projects, which are around 80 miles away. So there's a lot of activity going on, largely due to the uranium price improving up north of $90, and it's sitting around the sort of above $90 at the moment. And so our projects there are now starting to look more relevant and attractive in light of that. And so we are reviewing our options with those, and we'll see how we can move those forward in some way in the future. And in addition to that, we really are always looking at M&A opportunities. We're constantly reviewing new project opportunities and also opportunities to unlock value with our existing portfolio of projects. So thank you very much for taking the time to listen to my presentation. My contact details are there on that last slide. So please, if anybody has any questions, reach out to me, and I'm more than happy to talk with you if you would like. Thank you very much.
Great job. Thank you so much. Let's have a few questions to wrap this up. I would like you to give some comment on what you think the current price of uranium is and any projections of the future.
Yeah, the spot market for uranium's pretty volatile. It's been up as high as $105 a pound. When we first started doing this, it was around $20 back in 2018. So we think, despite the fact that it has come off from 105 down to 90, just above 90, we still think that's a phenomenal price, and we believe that even at $70, the projects that we have can be very attractive. So we think that, sorry, excuse me, that actually what we're more interested in is the long-term price for uranium, the contract price, and obviously that is a little harder to determine exactly what the price is because it's done under a more of a complicated contracting scenario. But we do believe that the price for contracted uranium going forward is well north of $70, and it's an extremely healthy environment for us to be investing in our projects.
And you mentioned in your presentation, but some neighbors in Wyoming who are getting into production. Tell us again a little bit about their progress.
Yeah, probably the notable ones are UR Energy, which is around 15 miles away from our Thor project in the Great Divide Basin. They've continued to produce at a lower level for years, but they've ramped up to full production recently, and they're working towards maximising the capacity of their production facility as we speak, and considering a final investment decision on their Shirley Basin project. And what's interesting about that is their Shirley Basin project is 8.8 million pounds. It's certainly of the size that we're trying to establish at our Low Herma project. The capital expenditure of that project that they've published is around $33-35 million. It has a very strong net present value return and a very strong internal rate of return. And it gives us a really good idea of what our project could look like if we can get enough pounds and the geological, geohydrotechnical setting to stack up. So we think that's a really interesting one to look at. But also just seeing UEC, which is the largest American uranium company, say they're going to be back in production in August, really tells the story that, the uranium business in Wyoming is back on. Same set of Peninsula getting into production at the end of this year. So it's hugely encouraging, particularly because the industry has been basically hibernating for a couple of decades. And it's, it bodes well for us. It's the right time for us to invest, and it's the right time for us to tell the story to investors so that they understand the context.
I can imagine. So we've actually had UR Energy on our conference. So great to hear. Bruce, tell us some closing remarks. You're closing out the conference for us today.
Yeah, look, I really do encourage people to do a little bit of research on the companies. I look at what's out there. There's the producers and UR Energy and John Cash, and they've done a fabulous job, and we really respect and look up to them, really. So there's a group of producer companies that have producer assets, and there's some exploration companies. We believe we're the only one that sits between those two groups. We're the only one with an established resource that can move towards a PEA and really look to wrap some economics around our project. So we think we stand apart for that reason. And we think that, we deserve a better valuation than we're getting at the moment. But I would say that, but that's certainly my pitch. So, I encourage people to have a closer look and to reach out to me if they get the opportunity.
Wonderful. Great presentation and great work you're doing in Wyoming. We appreciate you being on our conference, and we'd love to follow along your journey with some future updates.
Great. Thanks, Anna.
All right. Thanks, Bruce.
Bye-bye.
All right, everyone, it's been a great day. In just a moment, you'll be redirected to the registration page for our next conference. Stay on and reserve your spot. On behalf of all of us at the Emerging Growth Conference, I'd like to thank all of our presenters and attendees for making it such a great success today. Remember, a complete replay of this conference separated by company will be available on our YouTube channel, youtube.com/Emerging Growth Conference. Subscribe there and follow us on Twitter or X at Emerging Growth C. I'm Anna Berry. On behalf of myself and our entire team, we wish you a very healthy, happy, and successful rest of your week and month, and we'll see you soon. Thanks for watching.